Hello and welcome to another update video about MATIC. On the MATIC chart, we have this quite bullish 1-2 structure on the 4-hour chart, which developed between September and January. Took a while to complete these first initial 5 waves to the upside and then a 3-wave pullback. Preferred interpretation has been that this wave 2 is over and that we're moving up in a 3rd wave rally now to basically $2.12 plus. 241 would be the first ideal target. $2.12 is just minimum target for the 3rd wave. And basically what we're doing on the smaller time frames is just to understand if this roadmap is still unfolding and which levels, if they break on the smallest time frames, will give us a first warning that this perspective has to change. So the idea is we are moving in a 3rd wave and we're tracking the microstructure to figure out if probabilities are changing or anything has to change. So if we go to the 1-hour chart, we can see that we're tracking 2 subwave structures here. They are very important, both bullish. So the idea is that in the first scenario, and I don't really have a very clear preference, they're both reasonable. They basically both point in the same direction. It's just that the subwave structures are slightly different. So I wouldn't try to demand too much precision from the chart on the smallest time frames, because I think the chart hasn't fully decided, or the market hasn't fully decided if it wants to follow the yellow one or the white one. Again, they're both bullish, so it shouldn't really matter. We have the support area defined. That hasn't changed since yesterday. In fact, the price actually dipped into the support area again and is already reversing. That support area was defined between 83.3 cents and 90.9 cents. So that means in this scenario, in the yellow one, we're dealing with a diagonal pattern, and here we had a wave 1 to the upside. It's a nice, it's actually a nice 5-wave move up from the 23rd of January low. That would rather emphasize the white count, because in any diagonal, typically we see corrective structures, but there are in exceptional circumstances, there can be diagonal patterns in which the wave 1 is a 5-wave move, the wave 3 as well. Yeah, but again, that's a little bit subjective. But anyway, we have a wave 1, we have a wave 2. The wave 3 might have topped here in this diagonal. If wave 3 is topped, we should actually go a little bit lower and possibly target 88 cents, maybe even 85.5. But as long as we're holding 83.3, we can go with that scenario and focus on further upside. So we might get another dip. No need, because the white count is there as well. And then we can focus on higher as long as it's holding 83.3 cents. I did also, in addition to that, add this parallel trend channel yesterday, which can give us additional or provide additional support to the price potentially. Okay, so that's for continuation of the bullish count in a diagonal in yellow. In the white count, I'll zoom in a little bit further. In the white count, we're dealing with a more aggressive bullish impulsive structure, where we also had a 1 and a 2, basically now in a 3rd wave to the upside. This 3rd wave itself is, we basically have another 1-2 set up here, possibly even another 1-2. Then, okay, wave 3 might have topped here off the larger 3rd wave, might still be unfolding. This is where the microstructure isn't entirely clear, but it shouldn't really matter for trading. The support area is defined. So let's just see if the market decides between yellow or white. If we go up more aggressively from here and react to the 98-cent level and then come down, I might make a case for, okay, the 3rd wave was actually here. But again, they are just labels. They don't really matter so much for trading. As I always say, don't trade the count. That's a very difficult concept to grasp for many people. Don't trade the count, especially not on the smallest time frames. They are too fragile. Trade the levels, and the levels provided great entries for anybody who used them here, 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 with great reward and risk parameters. Okay, so it's always, I mean, for any trader, I mean, you want clear parameters. There are many coins that are moving up or down in, very, very, you could say, unpredictable fashion. But if you don't get clear parameters and the probabilities are unclear, it's very difficult to really define a trade setup, at least with Elliott Wave. I mean, it's always worth, because Elliott Wave is such a great risk management tool, to understand what are the levels where the scenarios are changing. And yeah, MATIC worked out really well, following really well the Fibonacci levels and guidelines. Please be aware that this B wave top is resistance. So we obviously had this B wave top on the chart. It provided some resistance. A break above it, as I said, could send us to 98 cents next. Then $1.01, $1.03, maybe even $1.06. These are the next Fibonacci extension levels. And there's also this previous swing high that could provide some resistance around $1.03, which is the 1.786 Fibonacci extension. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.